the process of becoming a bank, it's lengthy, it's time consuming, it's expensive. But in the background, it also gave us a period of time to start thinking about the brand and what we're going to do with the branding, how we're going to launch a savings business into the UK marketplace. We did multiple rounds of research to both quantitative and qualitative to reassure ourselves and also the board and our investors, because we're a private equity owned business, that the decisions we're making were the right ones based on ground in fact, not based upon instinct. Ahead of plan, we hit 1 billion within 6 months. So actually in under 6 months, which for a new savings brand with a relatively small product set at launch, quite a major achievement. Have the right partners to help you. We were very, very focused on the procurement process. Whilst you were our incumbent web agency, we went through a process to identify the right partner for us. And actually we made the right decision, because having MagiClick available with your experience did make the journey a little bit easier for us.
So firstly, Iain, thank you for joining us today.
You're welcome.
For those that aren't familiar with Vida Bank or yourself, can you give us a little bit of a background?
Yeah. Well, I'll start with Vida Bank. I've been there now for 3 years, actually just over 3 years. Joined from Wesleyan, which was a mutual assurance society in Birmingham, and prior to that I was at Thomas Cook and at Virgin Money. So I've been in a few financial services brands over the last sort of 10 years. But prior to that, I actually worked agency side. So I was sitting in your chair for a number of years. Yeah, sort of cut my teeth with McCann Erickson in the late 90s, early 2000s. Definitely showing my age now. Before I decided to set up my own agency back in 2003. So built that up over a number of years and then moved client side.
Amazing. So that 2003, that would have been post .com crash coming out there. Then it was into boom times in digital. So what did your agency do?
Well, we started off as a direct marketing agency, because that's where I sort of cut my teeth in marketing. Okay. But we soon quite quickly transitioned to being a email marketing and digital marketing agency. So we were really at the cusp of when the sort of traditional marketing was moving into digital in quite a meaningful way. And we were really successful at doing that and worked with a number of big blue chip clients. And it was an interesting time to be in the agency world, because it's a little bit like now with AI, everybody's sort of learning and adopting to new technologies. We were doing that back in 2003, 2004. And then 2008 came along, of course, and that made life running a business quite difficult. So that was an interesting time as well.
Yes. Although even because I started my agency in 2008, even throughout that period, I think there was still a sort of a push towards digital. It almost accelerated digitalization within financial services, at least.
Absolutely.
So how did you make that shift? What's the kind of...
The shift really started in 2008 because they made it really difficult to run a large agency business. It was quite challenging. And at the time, we just acquired the Northern Rock account. And you imagine, we all know what happened with Northern
in 2008,
Rock.
you were quite...
Yeah.
Oh, right. Okay. Good timing.
Perfect timing. So it was just after the sort of the run had happened that we started working with Northern Rock, and they'd gone into state ownership. But then sort of jumping forward a little bit, Virgin Money came along and acquired Northern Rock. So the agency started working with Virgin Money, and they became one of our biggest clients. And then in around, my timelines are probably wrong, 2008, 2010, I sold the agency. And I can remember sitting with my client at Virgin Money, and his question was, well, so what now? What are you going to do? And I said, well, actually, I haven't really thought about it. Maybe some consultancy work, might start again, don't know. And a week later, I was working for Virgin Money.
Amazing.
Yeah.
What was your role there?
Well, I started off as customer director for the travel and adventure business. So typical Virgin brand, it was looking after the travel insurance and the travel money business, which was a growing business for Virgin Money at the time. But then I moved into proposition director for the mortgage side of Virgin Money as well. So that was working with the sales teams and the marketing teams and just re-engineering the whole mortgage proposition, the way that we faced off into the intermediary marketplace, looking at the systems, the platforms, the products, and how we actually positioned them within the marketplace. And then did a variety of different roles around Virgin for about 5 years.
So before we talk more about Vida, I'd love to sort of finally ask around, you've sat on both sort of chairs, so to speak, sort of agency side and client side.
Yes.
What are the key sort of differences or any kind of learning?
Yeah, I think agency side, the best part of being in an agency is you're working with multiple brands in multiple sectors. So no one day is the same, and it's exceptionally fast paced. And when you run your own business, as you'll know as well, Mark, that can be the best days that you've ever done in the office, they can also be the worst days. You know, like every client you win, you lose. You know, you're only with 3 phone calls away from disaster. That all stories around running an agency. Client side, you've got that opportunity to get a little bit more deeper and get really focused on a specific brand and a specific segment and become expert in that. And sometimes in the agency world, you don't have the time or the luxury to be able to do that. And I think what I've also learned as well is when you sit in the agency world, you can be guilty sometimes of thinking it's dead easy in the client side.
Never.
And it isn't actually. It's just different. You know, it's very, very different. But I'm glad that I've done both because it does give you a real sort of perspective on the challenges your agencies face. So I like to think that I've got an empathy with agencies we work with, and you know, an acknowledgement of how much effort goes into what they do because it is very, very difficult.
That's good to hear.
Yes.
Moving back to Vida then, I guess. So we've, MagiClick, we worked with Vida Home Loans for coming up to 10 years now. So we won the pitch back in 2016 where there were just a couple of team members when it was a startup. And we've also been busy over the last year or two supporting the transition and the journey for Vida to become Vida Bank. I think our audience would love to hear more about that journey from your perspective, really, and maybe starting with some of the key challenges.
Yeah, well, I mean, the journey started probably 4 years ago before I joined, and it was one of the reasons why I joined Vida because the CEO painted this picture of a specialist mortgage lender becoming a specialist mortgage bank and launching a retail savings business. And actually, as a marketer, you don't get the opportunity to do that very often in your career. So that was a real bonus for me in terms of why I came along. The process of becoming a bank, it's lengthy, it's time consuming, it's expensive, but actually from starting the process in earnest to getting the banking license from the regulators took us just under 12 months.
Okay.
So again, and because we were already a regulated business as a mortgage lender, you know, we have an understanding, we have some of the frameworks in place already, the risk and the compliance that you need to be able to support a banking license application. And you just start that process with working with the regulators to go through all the due diligence and establishing technical things like I don't understand, such as ICAPs and ILAPs and financial numbers and all that sort of good stuff. But in the background, it also gave us a period of time to start thinking about the brand and what we're going to do with the branding, how we're going to launch a savings business into the UK marketplace, who our target customers would be. We had that luxury of time to plan what we wanted to do, which is actually quite rare in most businesses to have that luxury of time.
So maybe touching on brand first. So you had this established brand, Vida Home Loans, and you also had Belmont Green as the kind of
the holding company.
What was the journey and how did you transition from Home Loans to Vida Bank?
Yeah, I mean, from a journey perspective, we probably researched, and I'm not exaggerating, over 120 different names for the business.
Really?
So yeah. I mean, I've still got the docs I could share with you in terms of all the different names and iterations. So it wasn't just a simple case of saying, well, we're Vida Home Loans, we're going to become a bank, let's just call it Vida Bank. On paper, it looks like that, but actually there was a real concerted effort into researching and understanding how the names worked. And we played with Vida Money for a long time as a branding name as well. But customer research told us that the word bank resonates with people. Vida is our brand identity that we've had for the home loans business and was going to be for the savings business. So it just made simple sense to call ourselves Vida Bank. Vida Savings as well, we researched extensively as well and looked at different iterations for the savings brand. And we also worked on the summary, well, should we just be Vida Bank and lose home loans and lose savings as trading brands and just trade as Vida Bank? And again, we researched that with both the intermediary marketplace and with customers. So everything was informed, not based upon what we believed to be true. It was based upon what customers told us would work best for them.
Yes.
And when I say customers, I mean both retail savings customers and intermediaries and partners.
It's funny when you say in hindsight, it might seem an obvious Vida, add the word bank to the end, but often that simple outcome or the neat outcome can take a lot of work and iteration.
Hard work and a lot of effort went into it. And it took a long time before we got to the point where we'd settled on it. And even then we were still asking ourselves the question, is this right? And we did multiple rounds of research to both quantitative and qualitative to just to reassure ourselves and also the board and our investors, because you know we're a private equity owned business, that the decisions we're making were the right ones based on ground in fact, not based upon instinct.
So when, from a savings perspective, you know, if you're the best buy on a supermarket or whatever, it's actually the Vida Savings brand that you use there, right?
Yes. And that was quite important for us because I think, well, mainly for our existing customers who are the intermediaries in the mortgage marketplace. Vida Home Loans is a specialist lender, is established, it's recognised, and we've traded as Vida Homes, as you said, for nearly 10 years. We wanted to have a clear distinction into the savings business, so that there was a clear correlation between the differential between a B2B brand, Vida Home Loans, facing off to intermediaries, and a B2C brand, Vida Savings, all under the umbrella of Vida Bank. And what that then also gives us is the opportunity to create new brands, move into new sectors, new segments if we want to. I'm not saying there's any immediate plans to do that.
No announcement today then.
Yeah, no announcement today on that one. And I'd probably get my P45 if I did. But it gives us that ability to be flexible and to have the Vida Bank as the holding brand that then owns and manages trading identities that can go into the marketplace and acquire customers.
Interesting. So I guess if we think then around the marketing activities and strategy, previously, the business had been marketing mortgages to mortgage intermediaries, to brokers, and now you're still doing that, but you also have these new activities, marketing savings products to customers. That's a big shift. So how did you adapt that marketing strategy?
It's a challenge because you think about the skill set we have within the business. It was all focused on intermediaries and B2B. So the end clients who use our mortgages are the customers of the intermediaries. They're not a customer of Vida Home Loans. So that was a big shift, understanding the consumer marketplace, starting to step into the world of performance marketing, to start thinking about how we acquire customers. Because actually in B2B, it's quite straightforward. There's a defined audience of circa 17,000 intermediaries. We all face off to them through the channels that are available to us. It's actually relatively easy to reach those 17,000 intermediaries. Reaching active savers, who are our target audience in the UK, was completely unknown to us, and very, very different approach that we needed to take. Now, thankfully, there's channels that exist that you can adopt. The aggregators are available to us, and you can price effectively. But you need to make sure that your brand, one, is out there and is being positioned correctly through those aggregators and through those shared channels. But also that when the customer steps into your environment, and bear in mind our only trading environment is the online environment, the website, that they see this new brand, but are at least intrigued to read more. They're then reassured about what they read, and then can seamlessly transact in a frictionless way all the way through to opening an account. Because as a new brand, you have to provide that to them, because there's an expectation. You're new, you're going to have no legacy systems, you're going to be slick, and you have to deliver that experience to customers.
It's interesting. Again, people might think a little bit simplistically that, rate is obviously incredibly important for the customer when they're choosing who to save with. But I'd be interested in your thoughts on kind of other factors, maybe around digital experience or others that are also important in that decision-making process.
Again, sort of going back to the research angle, we researched that extensively because we needed to be certain that when we launched the business, all the questions the consumer would have would be answered as quickly as possible. So what we learned from that was the first question they ask is, are you FSCS protected? And I can remember when we first did the initial testing of the website internally, feedback from colleagues was, we seem to be mentioning FSCS quite a lot. Is that a mistake? I was like, no, that's absolutely very deliberate, because consumers want to have that reassurance that you are. They want to know that you're based in the UK and that you're regulated, that you've got a UK-based customer service team, and that's important to consumers, and that you've got a really good web environment and an app that they can use to manage their accounts. Those are sort of the 5 things that consumers want. And we had all those at our disposal. We just need to make sure that we surfaced that in a meaningful way through the web journey. And we prototyped, with your help, a number of instances of how the website could look, and did a lot of customer testing, user testing of that website to get their feedback that we were giving them the reassurance that they needed, but also that they could find the products that they wanted and then could apply and open the accounts really easily and readily. So a lot of hard work and effort going into that.
Yes. We actually did a bit of research with YouGov last year, focusing on topics around kind of what are the key drivers of why people choose different savings providers. And rate is obviously critically important, but actually what we found is for different age demographics, particularly younger users, I think it was a fairly significant number. It was above 30% would actually choose a lower savings rate if it had a mobile app, for example. And that varied through different age ranges, but still when you get to sort of higher age ranges also was reflected there to a lesser degree. So that was interesting. But there, when we dug into that further, that was within a certain tolerance of a small, relatively small. So convenience, people are prepared to
forgo a little bit of rate. Definitely. I think that's a fair shout. I mean, I think where we've tried to, we position Vida Savings as competitive rates that are transparent. That's our sort of mantra. So we will always be competitive in the segments that we're serving. And we sometimes might be top of the market. But we should always be there or thereabouts in terms of being competitive with the rates that we offer our customers. That's a sort of a deliberate play by us.
Interesting. So I think you launched at the end of 2024, so end of last year. You're a good few months into this, and I saw you'd announced recently you hit a big milestone in terms of savings deposits.
We did. I mean, ahead of plan, we hit 1 billion within 6 months. So actually in under 6 months. Which for a new savings brand with a relatively small product set at launch is quite a major achievement. And we've just done some work mapping our customers and doing some insight into the customers that we've acquired. I mean, without going into too many numbers, we've acquired a large range of account holders. It's spread across the UK. The age profile and demographics very, very broad as well. Average balances are higher than we anticipated. So that's a real positive for us as well. Early start, but a very, very positive start for the business. And I think the most reassuring thing for me personally is the volume of customers and the volume of deposits. That's customers telling us they trust us, that even as a new brand, the work that we did with you guys around getting that website right, making sure it gives the customers all the information they want and all the reassurances that they want, it's done its job and it continues to do its job. Now, we're not relaxed about that. We're constantly evolving and looking at how we can improve that web experience for the customer. But I think, it's a tick for us right now that 1 billion of balances in under 6 months is vindication that we've actually got the website correct at the start and launched it properly, and that we've got the right channels operating to drive that customer traffic to the website.
So I guess from this vantage point of a successful launch, if you had a time machine, I could go back in time to speak to Iain right at the beginning of this journey, sort of 3-4 years ago when we started that, what piece of advice would you give?
Wow. Well, one, research more. Right, I don't think you can do enough research, and I know I've mentioned that point a lot as we've been talking, but actually it's been really helpful to do that research and reassure ourselves that we were taking the right direction. 2, don't underestimate the amount of work that's involved. I mentioned before we had the luxury of 9 months to plan all this, but even as we got towards launch, it was still rushed. At certain points, you suddenly realise, even with all the planning in the world, there's always going to be something that comes out of the woodwork that you hadn't thought about or that you needed to cover off. So just being rigorous with that, I think, is really, really important. And I think 3, have, and this isn't me playing to you, Mark, but have the right partners to help you. We were very, very focused on the procurement process. Whilst you were our incumbent web agency, we went through a process to identify the right partner for us. And actually, we made the right decision because having MagiClick available with your experience did make the journey a little bit easier for us and gave us reassurance that actually, if we need your help, you were there to help us and you've got the experience to be able to do so.
Great to hear. I guess if we zoom out and think more broadly about the market, there's lots of talk around different technologies emerging, etc. What are the key marketing and digital trends that you see in the banking sector for the rest of the year?
Yeah, well, I mean, of course, the answer to that is going to be AI, isn't it? I mean, it's not just a buzzword. It's something that I think is touching all our lives now, both professionally and personally. So I think especially even generative AI is game changing for both our sector and also marketing more broadly. I mean, even simple tasks like bidding on AdWords can be generated through AI, all the way through to creating ad sets and concepts and generating imagery through AI. I think now it's got to be it's integral to the marketing team and how you operate. It's not just something that sits on the outside as a tool that you can sort of ask for some copy lines. It needs to be in the team, and you need to have a platform and how you understand how to use AI. And I think that's a learning I've taken away in the last 3 months, all around how you actually author on AI, how you ask AI to give you the outcomes. That's the most important thing that you can do. So I think that's game changing for the industry and for marketing as a broader whole. I think also the deprecation of third-party cookies. That's definitely having an impact, and that's something we've had to get our head around pretty quickly, because moving into performance marketing for the first time, having not done it myself for a number of years, there's a steep learning curve for us, and how we can maybe use first party data now to help inform customer marketing and acquisition. So that's a game changing piece for us as well. So I think those two things, they are definitely the areas that we're focusing on right now, and we're seeing increasing use of AI across the marketing team and in the business.
If you don't mind sharing, are there any sort of examples of how your marketing team was sort of using it in practice you'd be happy to
Yeah,
share?
we actually did it today. So we're establishing a campaign for this month for Vida Savings.
Yeah.
And we've worked with 2 AI tools to help us with ad content and copywriting. Not being lazy in the point of saying, write some ads for us.
Yeah.
We've sat down with Clixus and written some ads, but we've then used AI to challenge the concepts and to provide us with A/B testing alternatives that we can use to see if we can get better results from it. So that's just one use case that we're using AI for on a regular basis. We also use it for customer insight. So, one of the great things that's happened with Vida Savings since the launch is we're rated excellent on Trustpilot. We've got 4.5 out of 5. So we use AI to interrogate those reviews to give us areas where we're strong and areas where we can improve. And you literally can just drop in all the review data and say to your AI tool, right, summarize this, tell me where we're doing well, but tell me where we can improve. And interestingly, one of the things that comes out a lot in terms of where we're doing well is the website. That gets referenced a lot by customers in terms of the ease of use of the website. They like the sort of fresh visual look and feel of the website. It's not cluttered. It's a frictionless experience for them. That comes out, and to do that without AI would take, weeks normally. So it's been game changing for us in that respect.
Good to hear. We hear sort of different things from different companies around kind of what they're doing in practice. And it sounds like you're sort of really adopting with both hands, which is good.
And even outside the marketing teams, the operations teams are using AI. We use it for, elements like criteria searching. AI can just index all your criteria and product guides very, very easily and provide, your teams with instant answers to criteria questions, which, with the best will in the world, the best underwriter will know 90% of the criteria maybe, or 99%, but there might be always that one question. I think, I need to just check that. We've got AI tools that I'll just do that for them instantly.
Yes. We should hold that for a future podcast, because I think there's some, that's quite a big topic that we'd love to sort of dive into a bit more. So you've had a busy couple of years, should we say? I'm guessing, like all these big launches, once you launch, you don't just rest on your laurels. It's into the next big thing. Is there anything you can share around what's on the roadmap for Vida for the next 12 months?
Obviously the reason we became a bank and launched the retail savings was to help diversify our funding. Prior to that, we were a wholesale funded business for the mortgage lending. Retail savings gives us a more diversified funding model and access to more funds as well. So we can be a bit more brave and a bit more adventurous with our mortgage proposition. So that's definitely where the attention is right now. So, shortly after launching the bank, we launched 3 and Easy, which was our first 97% LTV product. That was pretty game changing at the time that it came in. That was a direct result of being able to broaden our funding base from the banking side of things. And the focus now is very much more on the mortgage proposition. So how do we take this new funding that we've got and improve the offer that we give to intermediaries in the marketplace? So without giving too much away, there are a number of initiatives and launches scheduled over the next months and years to allow us to lend more to intermediaries, to help get more people into the place they want to call home. Lots to watch in this space from the mortgage side of things.
Amazing. Well, it sounds like we should come back next year and talk about those new things.
Absolutely.
So, wonderful. So, really appreciate you coming in today. Thanks for your time.
No problem at all. I've enjoyed it.
We look forward to seeing the next 12 months for Vida.
Thanks very much.